is ripping.
My tummy hurts.
Pretty good, right, man?
Good afternoon, guys. It's Friday, May 20th. Sick week in the markets, sick day in the markets. Another great day, great range in this S&P. 380.54 low, 397 high. It was just incredible day trading. If you guys know us and trade with us, you'll know I have all these levels marked every day. I've been watching these levels for a long time. They all hit. If you go back, scroll, all these levels every week have been hit like crazy. This morning I told everybody out of the gate, we're sitting here, we plus 1,700 ticks out of the gate. It actually looks like it hit like 1,800 at one point. I think I saw 1,780 at the high. It looks like it did hit over 1,800 out of the gate on the ticks this morning, which is right here, NYSE tick. So if you're looking at today, we gapped up. I said, do not chase this gap. We never chase these gaps on the ticks when they're over plus 1,000. I do not chase them. We gradually came down all the way till 12. Hit a couple lows down here around 12:45, 1 o'clock, and then we started to creep up. So how I gauge these and how I watch these, when you look at the day and you're overall trending down, right, and then you start here around noon and start trending up. So we had a nice rip at the end of the day, but I'll get into that later. But, we get a nice move, and then we kind of overall roll up. When I'm looking at those, I am mainly seeing that on the momentum indicator. I mainly see that on momentum. You can see this as positive divergence coming in here. But we caught these shorts. These when we broke through this wedge here, I said, wait for the test of this wedge. Wait for the test of this wedge. We came down, we broke out below it. We came up, tested here, and failed. As soon as we failed, right here, through the 17, these indicators that I use and these moving averages that I use work very well. If you're looking here, our entry was here, short, scaled out down here, caught this short more, caught almost to the bottom here. Really sick day in the markets for us. Anyway, you pull down, you consolidate, you pull down, you consolidate.
IDEX, Ideanomics, announcing receipt of notice from NASDAQ regarding late filing of quarterly report on.
You consolidate, you pull down more, consolidate, pull down more. You get a really nice thrust down here, and then an immediate reversal. This 381 mark, I was watching all day. We did hit 54, so about 46 cents below my mark here. But this is an old start leg. This first level was last week's low, 512 low. So this has been marked here. This has been marked here. This has been marked here. All these levels that got hit have been marked for a while. Now we're hitting. If you're looking back like this is an old start leg from back last year. I'm talking about March 5th. We're talking about this old area in here, January 26th of last year. So this level right here that we hit today is very important. Again, we hit it to the penny pretty much. I mean, within like 20-30 cents, this old start leg that I have. My next level down, really, even though we had a nice short covering rally at the end of the day, my level in the next couple weeks is down here at 340, maybe even as early as next week if we start. We did a lot of damage to the markets here in the last few weeks since April, beginning of April. We did a lot of damage to the markets. A lot of stocks have been crushed. A lot of stocks hit 52-week highs this week, and again today. A lot of stocks just getting wrecked. I always say as fast as we go up, we can go down. So you get a few months up, a few months down. So I've been playing these levels every day, trading them every day live in the chat room, calling them out live, and giving you these levels. Now intraday, a lot of people caught this bounce this afternoon. You can make a lot of money on these intraday, same day expirations. A lot of people call them 0-day expirations. We call them Friday Lottos. These calls here and puts. So these ones I had 392. These things raged. When we broke out of that wedge here, these things went from 3 all the way to 1150. Okay, 3 to 1150. The SPX puts, some of the out of the money ones went from 10-20 cents to $14-15 in like 2 hours. These 391s, these went out of this wedge. They went 263 all the way to 1050. in a very short amount of time. I mean, literally like an hour and a half. Okay. So, if you're scaling out along these, I scale out in these consolidation areas. I scale out here, here, and up in here. So if you're trading this style that I trade, again, this over here, the way I watch the markets, if you're trading this style, it can be very beneficial to your account. Trading these Lotto expiration days especially if you have a small account. If you got a small account, you can double, triple your account on these days pretty easy. You can turn $2,000 into $5,000, $6,000, $7,000, $8,000 pretty quick. So maybe even more. Had one guy make $14,000 in here today off of a $3,500 account. So super easy to do if you know what you're looking for. We do train, we teach, we call this stuff out live. Again, all these levels are put in pre-market. Okay. I would walk everybody through this every day, all my trades. This was my trade today. This right here was a phenomenal trade. I said, watch for positive divergence. We're looking here at noontime, 12 o'clock, 12:30, 1 o'clock, 1:30, 2 o'clock, okay? When you're looking at this, you see positive divergence in here. You see this reverse. Usually we don't get a reverse that hard, and then usually it comes back down, does a double bottom or so. We had a higher low, and then we went. But the thing is here, I'm watching volume profile, VPOC was 382.88. So you would be long over 382.88, okay? Well, these 385s or 384s even, look at the volume coming in here at the end of the day. You got 2,000, 3,000, 4,000, 2,000, you got 5,000. Tell me these guys aren't making money. Look at this one here. You got somebody come here, 6,000. These are buying these things at 50 cents to $1. These are down here. They had a low of 28. They're buying 1,000, 2,000, 5,000, 6,000. These things are running 34 cents all the way to $5. They almost went back to their highs. So, Lotto expiration days, these things are almost to zero premium. And you're catching a move out of one strike out of the money that's running from 30, 40, 50 cents. Let's say you got in $1 and you pull $2, $3 on a 10 or 20, 30 lot, So same with this one here. Look at all these that bought at the end of the day. Tell me somebody didn't know something. They're buying them right here, 20 cents, 25 cents, 30 cents, on up to 60, and they rip in 20 minutes all the way to 350. These ones here are out of the money. These ones here, same thing. Look at all the buying. Look at all the buying. You got momentum, positive divergence, and you're going from a low of 9 cents. You're running all the way to $2. Tell me you can't buy a 50 lot at 9 cents for $450 plus maybe $50 in commission. Let's say you paid a quarter for 10 or 20, right? $500, $600, $800, $1,000 even. Look at that. Nice move. Easy trades there, and you have these higher lows on the ticks, right? So that's just one way to trade these expiration days. We did have levels for the Qs. Qs yesterday were real easy to call. We caught that move on the Qs, that breakout level on the Qs yesterday. Right here. Caught this level right here. Caught a $3 move on the Qs. That was pretty much over. Then it rolled over. Caught that. I left early. We had this double bottom. I had it marked, said long back over 291. We ripped to 293.50. So these were easy trades yesterday. Today Qs wasn't as easy. Qs were all right, but I guess my levels when this wedge broke down was way down here. My wedge on the SPY was a lot easier to catch. Like I said, on the SPY right here, this level on the SPY for me, this breaking down below this wedge, this little trend line from yesterday was a lot easier momentum trade, a lot easier to catch, and we caught it up high. So, we caught a really nice run here. Anyway, you're looking at other stuff. Tesla, I told everybody, Tesla 710 short today. 710 short right here. I had this line drawn out here, 710 short. This thing went all the way to 633. You're almost getting an $80 move right here on the short on Tesla today. Tesla is down, it closed down $49. But I told everybody, I left this here. VPOC was 710. VPOC right here, center point of control is 710 and a quarter is what it was, actually the exact number. I told everybody short under 710, 640, and then 633 was the bottom, and it bounced 633 a couple times and bounced. Really nice trade on Tesla. Google, same thing. Google 2200, I believe it was. It was 2200 VPOC. Told everybody 2200. 2200 is here. VPOC was, I had it early. It changed because there was trading in there. This was center point of control is 2207. And then we broke below this one too, this node 2180, which we came up and stopped at. But my line was here, 2193, 2200 was midpoint, 2200 short. We went all the way to 2115. So an $85 move here on Google, and then a nice bounce. Now you guys can't be biased if you're day trading or short-term trading. You cannot be biased. You can catch this move short and long, or just short and be out. Take your profits. You hit your target and be out. My next level for Google, I'm still short Google. If I'd like it down here to 2050. The old start leg here, consolidation. If you trade this style, VPOC 2050, call it. So we're closed at 2177. I'm looking at 2050 for my next level if we sell off Monday, Tuesday next week. 2050, and then below that things can get ugly. But we filled this gap pretty quick today. You see how quick they move through the gap of the volume profile. This volume profile really works, and I trade these start legs, these old start legs here, 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 and here. So these are just old start legs, and every time we hit them, we break down a lot or bounce off of them. So as you can see here, this is an old start leg. We test, fail. There's your short right there. Okay, we break through resistance, come back up, test it and fail, test it and fail. So these are the areas that I play. We bounced off it here. This has been here forever. So these levels are the ones I like to play. Shop, same thing. Shop's in consolidation now, 1, 2, 3, 4, 5, 6 days. Do not touch Shop. Shop had a nice move this morning, pulled all the way back. Okay, Shop had a nice move. Here's my old start leg here. Bounce, bounce. As soon as we hit, look how fast that candle goes. As soon as we break below it. So here's your short. You're either going to go long here or short here. We are below volume point of control on the daily. And we had that wedge breakdown, which was kind of weak. So we bounced here hard. We failed. We failed this here, which was the top of that wedge. Okay, top of that wedge. It's not rocket science. Easy line, easy areas. If you learn how to pick these areas out, we test, bounce. Right. We come through. Here's our start leg failure. Okay. Now here's another failure, and then we go into a wedge, lower highs, higher lows, and then we break down. So you look at these, and then you get a VPOC here, center point of control 681. You break down, and if you trail out here, and then you get another move down, you came back up, you tested, you didn't even come close to it. So this is still weak. This is below the 21 moving average still. Now I'm not touching this trade. We're still in consolidation. Had a big day yesterday, no doubt. But I want to see it break over and above this consolidation area or below it. Okay, over and above it or below it. My next target is still 300 for that. This split's going to affect some of that. So center point of control is 350. Like I said, we hit 340 today. We did hit below center point of control. I thought it would come down a little more, but this start leg is 300. Okay, 300 on Shopify. BA hit some 52-week lows again today. BA's been looking pretty weak. Short was here. Old start leg from back last year, from October 20th, 20, which was a long time ago. We tested here. We bounce, fail, come up, test again, fail. There's your short right here. You could have shorted here, and got a big gap fill. Maybe that was earnings, I'm not sure. But we slow down at point of control here. Next point of control is here. So we're hitting those areas. We are getting ready to lose all this. So if you look back here, this old start leg here, I'm drawing this live. This has not been here. 115. So you're hitting maybe 115-ish. Get rid of that. 115 area. Below that, we can fall pretty hard on Boeing. I think we can get down even to 92 pretty quick. We're losing point of control here. We're losing volume, profile, support. It's all become resistance. Okay, so people think I'm crazy, but all these levels have worked out so far for the last 3-4 months. I mean, perfect. Same with this one here with square. Bounced off this level, came up here. Get over point of control. Looks like it's going to take off. We got a triple top here and then roll over. Get under. So your short is here. Your short is through this old start leg here where we test, We broke above it, broke above it, broke above it, bounced off it 3 times here. So your short is here. Well, you fail. Consolidate, move down lower. Consolidate, move down lower. We're down here, point of control. Point of control was 106.57. We're at 83.40. We went all the way to 78.89 today. And if we lose this, this is going down to this next point of control down here. It's got some support here still on volume point of control. It's still got some support here. So this is a lot of consolidation here for 7, 8, 9, 10. It's like 4 months of consolidation. So like I said, as fast as we move up, we move down. So we can move up fast, we can move down fast. This is just, there's a lot of consolidation here, some consolidation here. So intraday, if you're looking at the way I trade, just keep in mind I trade levels. Start program, start, fail. Here's your short. Okay, here's your test and fail, test and fail. So you're short again below this line. I don't go long above this because volume profile, okay? Volume profile is thick here. I do not go long above this because profile is thick. It's going to take a long time to get through all this chop. I don't care what kind of news comes out. I don't care. This is all chop. This is really heavy resistance and chop right here. Okay? They'd have to chop through here really slowly grind. Yeah, you might get some short covering and some little rallies, but you're going to hit the brakes here at 111, 112. So my next level is down here again, 85. If we fail this, my next level is even lower. If we get below here, this start leg right here, no, it's not working. Let me see. If we get below here, this thing is in trouble. Learn how to read volume profile. Learn start leg programs. Bounce, 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 bounce. Bounce hard, okay? So this is your old start leg where you broke out. You test it, 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 you break out. Now what'd you do? You failed it. You came back up, tested it, you failed. So if we fail this, we're going to here. If we fail this, we're going to here. Just watch your levels. Now this, on a day trade, look how easy this trade was today on my moving averages that I have set up and my HK charts. The way I have this set up, this never got you out of this trade all the way down to the bottom. First time you're going to get stopped out is right here, 89. If you shorted right here, based on the style I trade, 97.62, you don't get out of this trade until right here, 89.92. Okay, you could have caught that whole trade based on the strategy that I use and that I teach. Easy day. Nvidia, the same thing. Nvidia had a great short today. I'm staying short below this line. Okay, short below this line, short below volume point of control. If you go on a daily, there's heavy resistance here. We failed here. We stayed in a range here. Okay, this is resistance. All this volume profile is resistance. Okay, so we failed this start leg. Okay, this is where we bounced. Bounce, 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 fail. Here's your short. Okay, here's another start leg from back here where you bounced. We consolidate on it, we fail. Okay, you short below it. Here's another start leg. You failed. You came back here. You tested, test, fail. Okay, here's an old start leg here where you got rejected. This is where I look to get rejected again, right here below this. We are bouncing off this. I would go short below this, 160. We hit 157.55 today. You see that little spot, that little wick right there. Now next level of support for Nvidia is 133.50. 133.50 area. Next level of support could be 134.50. It's within. When you scroll in and out, it changes. So you look like I like about 134.50. This is 132. The more I scroll out, you're looking at like 134.50. But it's this old start leg here. If you look at this exact candle, this is where you would bounce. So this will be my next test, and either bounce or failure. So if you're patient, you can catch these moves. If we get below here, we can get down here pretty quick, down to 98. Okay, you can get down to 98 pretty quick. I hate to see this thing go all the way down to 70s or $60. It's crazy. But again, today, if you trade this style, you could catch this move, and you get stopped out right here, down here, 159. It's had a really nice bounce. If you trade this style and you didn't take this short, you could play this bounce right here, over this moving averages that I use, and over point of control. See all this buying coming in at the end of the day? You come through the momentum through zero line. Here's your long. First candle with no wicks, 159.38. You run all the way to 167. There's your trade. Okay. You guys can trade this. We'll teach it to you. It's easy. I love it. Ed and Nick both teach too. Ed trades a lot of futures. Nick trades both futures, stocks, and options. This is another one, Apple. Okay, I've had these levels drawn. Here's an old start leg. You test, 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 break out. Here's your long. Okay, you trade this a day or two or three, a week, a month, whatever. You come back here, you stop. You bounce here, you come back, you test. You did close below this. Looked like it was going to be a good short. Market rallies, you get a big bounce. So you're long over here. If you're a short, you got stopped out. If you're long, you're over here. You get a nice 2-week run. You come back here, you test, you bounce, you test, you fail. Here's your short right here, 152.50. You come all the way down here. This is an old start leg right here. Okay, start leg from back here, and right here, right here. Had a nice gap here. So here's your start leg, and you finally, this is a 1, 2, 3 times you fail it. Next level, if the market sells off, VPOC, volume point of control, this old start leg is 124-ish. 124. If I look at, calling it 124. So if we sell off hard, this thing come down 124, you got a lot of support here on volume profile. If you get below here, look out below, you're in trouble. Get right in the center point of control, this wedge, you know, where all this consolidation happened and you broke out before. You can get back down in here, 115, 118. Everybody thinks I'm crazy, but watch these levels pan out. They've worked week over week over week over week. IWM, you know my feelings on IWM. We've had this drawn for months. This is a whole year of breakdown, a whole year. Okay, you know, start leg here, you break out. Start leg here, you break out. Look where you come down here, you bounce, you bounce, you bounce. You fail on this right here. You fail here. This profile, all these people who are long are trapped. They are trapped long. Okay, so you fail, you come down, you come back up, test and fail. You get a huge run down. Okay, so you go from here all the way to here. You go from 190 all the way to 170 in about 5 days. Okay, so this line is, all this line is an old start leg from right here, 170. We hit 170. We hit 170, 179 today, but we hit 170 last week. Or was that Monday or something, or last week, last Thursday or Friday. We hit it right here on the 12th. Okay, so we're coming down again. I still say we're coming down here to 160 on IWM. I still say we can come down here. This old start leg here, maybe even volume point of control is 153. Okay, Disney, same thing. I'm below this line, below this trend line. I'm below here. I came back up, tested and failed. Same thing with Disney. If you look at Disney, I'm a bear on Disney. If a market gets hammered, we're coming all the way down here to 80 bucks. I'm calling Disney at $80. This is an old start leg. We're ripped down here and bounce. Had a massive bounce here. There's heavy support right there. Okay, there's going to be support right there at 80 bucks on Disney. So we've been short. I've been short. You know, I have been playing the bounces, but I make better money when we go short. I like trading short. That's about it. I got 78% of stuff red. Traded, told everybody Chevron today. Chevron had a nice breakout. Chevron had a nice move, and then it pulled back. You're looking at these trades, really nice short. Probably would have been stopped out here on my strategy, but we did not cross the 17 moving average. We did not cross it. So you may or may not. If you would have got in up here on the crossover, you may have not got stopped out here, or you could have scaled on this big candle or this big candle here. You could have scaled out. I would have personally stayed short and probably got stopped here. But if you stick with the rules of that strategy, just because I'm a fast trader, I'm in and out of a lot of stuff quick, on that bounce I would have got shaken out, and then you get another flush, right? This is what I like to look at as consolidation right here, and then your move. So your long is here, 246 cross, 165, and you bounce up to 168. So that's the style I like to trade. I like the consolidation, you know, range contraction leads to range expansion. So I like those. I like the positive divergence here. SPX though, SPX had some great trades. SPX long, SPX short. What was it? That short was at, where did we short? 39.05. 39.05 puts were crazy, I know, but I think we went out of the money a little bit. The 3900s, the 3890s, they went from down here 750 all the way to $70 in about an hour, half hour, 45 minutes maybe. They went from our entry was here, 1050, went all the way to 1 o'clock. So about an hour and 20 minutes. 1310 is 1:10 p.m. You know, that's a huge move, right? Your entry was here. We broke that wedge. If you didn't catch it there, you caught it at $16, $17. Even if you just sold half of it at $30, $40, really nice move there. But the end of the day bounce was insane. The end of the day bounce. I was looking at the where'd it go? SPX. When we had that divergence here, once we came through the zero line, we came back and just consolidated here. All this is consolidation, right? Consolidation. That's all it is. The longer the time frame you look at, the better you can see it. If you go to a 15-minute here, you get a real nice consolidation. If you go to a 30-minute, you get your no wicks, no wicks, no wicks. First inside candle, first inside green, and then you break out. So you're at 38.30, right? 38.30. On the 38.30s, these things went from $10 back to $57, right? There's hardly any volume there. These ones went from $1.70 to $24. The further out of money you go, the less they are. These were $1, and they ran up to $13. You don't see any wicks there, any candles there, because there wasn't any trade in there. There's only 3,800 contracts on this strike. If you're looking at these, some of these out of the money ones were crazy. These ones went 50 cents to $4. These ones went 15 cents to about $6, $7. You got to be quick. These are only 10-minute trades. These are 5-minute candles, so 5, 10, 15, 20. This thing started 52, just raged, went all the way to $11. So 52 cents. Let's say you got in at $2, $3, and it's running all the way to $8, $9, $10. You're going to mark it in, mark it out of this thing pretty quick. Okay? SPX. And that's based off of this. Now, this is the longer time frame chart. This is based off this strategy right here. This strategy. All right? If I go to a 10-minute, you can see it a little better. I go back and forth. You guys know 5, 10, and 15-minute chart all day long. Consolidation, breakout. My level was hit here. If you waited to be conservative and your over volume profile, VPOC, volume point of control, is about right here in center, 383. This thing consolidated and broke out. Consolidated. There's no profile here. There was no profile prior to, if you go like this, there was no profile down here. Just means there's nothing traded. If you go like this, there was no profile. Profile got real thin, and this build out right here of VPOC, this was built right here within a couple hours. Okay, hour and a half. All that is consolidation. Then you get your run. So if you didn't catch this first bit of this choppy move with these wicks, wicks, that's all chop. Okay, you got 4 candles of chop right there. If you didn't catch this, you caught it here over my support resistance line. You're over volume point of control, you're over volume profile bulk, and you're getting a rip here. Okay, I didn't like that double build today. I didn't like that double build out, so I said we're going short. I did not like the build out in the morning. We got this build out here. If you're looking at this here, we had this bulk build out here, and then here. I didn't like. That's why I stayed short. We did not have. If I take off the extended hours, you can see it better. We did not. If this was not there, watch. If you're looking at it like this, we had this double build out. We had a build out here and a build out here. 520. If I go just to today, and then I back up, you can see the build. See how much this build is, and then this build, and then you come down here. This was thin until this started. All these candles here. This was really thin, and then we went to zero, about zero with 0 contracts and maybe 2 contracts, single prints. We had single prints on market profile. Okay, single prints on market profile. Then we get our bounce. Single prints market profile. If you guys don't know what that is, come join us. We'll teach you. So this is how you can read this stuff. Market profile. You use Bookmap. You can see institution levels. There was heavy support at 381 on Bookmap. Whatever you use, whatever style you trade. If you want to freshen up and learn something else, or just get a little better, or you want to learn a totally different strategy, this strategy pays for itself. Take time to learn this strategy. It works. But all right, I'm out of here. You guys have a great weekend. Brett with Off the Chart Trading. Hit us on Facebook, Twitter, or offtecharttrading.com. Somebody's here asking me about the small caps. Small caps are great. The ones I stay away from though. Okay, here you got XGN. I'm going to run through these real quick. You got XGN, you got DERM, you got PRTG, TNYA, EBET, ALLR. All these have one thing in common: very low liquidity. Only 711,000 traded. All the rest were lower than that. As I move up my list of what I had today, FHTX 1.1 million. These all had really good moves, but they're thin and they can rip your head off real quick. They don't have a lot of volume. They are thin and they have a wide spread. Okay, so be careful with those. Once you get in here, 2 million. These were good. APLD. This had some pre-market news. Let me put on extended hours. This one, MDXH had pre-market news. It pulled back. It never recovered. TNXP was decent. TNXP. TXMD, if you're trading small caps. Redbox was great. We all traded Redbox today. Jerry made a bunch of money on Redbox. Called that out. As soon as it broke high day, it was all over scanners. $4, $4.10, $4.20. It had another rip here. Pull back. It didn't recover after hours yet. It didn't recover here either. But really nice move up until about 11:30, 11:40. SIGA was a big one. SIGA had news this morning or something. It was moving around this morning. It was up here this morning. Pulled back a little bit. As soon as the market opened, we kept hitting new highs. It was all over. If you look right here, 680 alerts on the high-low ticker. So this thing was up. Had real nice consolidation. If you're looking at this 30-minute chart, you never got stopped out of this thing. If you're looking at a 15, you might have got stopped. You got stopped here, a second candle. This strategy, second candle, you're out. Had another go at it at the end of the day. So you would be long. Here's a flag here. You got a real nice flag here. And then you get another breakout. So there's nice consolidation, nice flag pattern, and another breakout. Above, learn this pattern. VPOC, volume point of control here and here. Bulk of the control. Once you get over here, you could have just waited till a high a day, breaking a new high. On these small caps, you guys know I like trading new highs. So you trade here. You're along as 1174. You run it wherever. I trade usually the next high a day. I would trade high a day here. I would trade high a day here if I wasn't out. If I was out of it, I would trade high a day here. I would trade high a day here. Now back here, you got to make your mind up whether you're going to stay in this thing or not. So you go to a longer time frame. You are trailing up. You add higher lows, so you do not get out of this. You go into a nice wedge. You break out. This is your new long here. You could front run it here or you could run it here. Okay. Either one. Either way, you're over volume point of control, and you are over your 17 moving average, which is one of our rules. You are over to 17. Okay. And you get a bounce off zero line of momentum. So, like I said, if you want to learn how to trade this stuff, let me know. It's a long video, I know, but everybody have a great weekend. I'm excited to teach people this stuff. I got some people making some good money and starting to be consistent in the group. So, you may not have watched this to the end. If you did, congratulations and good luck. And if you're not part of us, come on. Peace.